Good evening, YouTube. How are you doing? It's been a while, but I have think an important topic to share with you on this day here. And that is actually again so potentially again it hasn't been confirmed or anything, but we have to be aware that maybe we are in for a some sort of a, you could call it like a liquidity crisis. You can call it, whatever. In 2020 we had the big event. And in '08, you had, banking crisis and all that good stuff. So, and actually what I've found here is that very often we actually have like a 4 year, roughly 4 years of time period in between, the big events. Again, this is potentially where we are today. COVID here, as you can see there with that mega spike in the gold to silver ratio. Probably it will be the highest it ever goes. I say probably because, hey, you never know. And you can see here back in 2016, we actually had some liquidity also crisis here with this spike. And then, I think they lowered rates or whatever they did, right? But they definitely managed to uh, to hold it in the bag here. And then here, actually leading into the spike, we had a huge repo crisis here. Not many people know this, that at the end of 2019, we had 2019, excuse me, we had a repo crisis, heavy crisis there, and then a few months later, the big event came, and we had a huge crisis there. So you can see here also in 1990, liquidity crisis here. 4 years later, liquidity. So you can see we are seeing these periods where they happen, to some degree, every 4 or 5 years. Um, Basically, from here until we peaked here, in 1990s, we didn't really have, any major peak whatsoever before we hit the dot-com bubble somewhere around here. Um, so could this be that we are there again? We will quickly remove some of this stuff here and go into the shorter time frames, because right now we are on the 3 monthly. So this is actually the all-time high for the ratio. Complete shutdown of the entire world, basically. And we reached 128, roughly. I don't think that will be breached again. Uh, could I be wrong? Of course. But I think that is such a huge event, basically shutting down the entire world. And that could push the price to almost 130. So again, what does it take to push it higher than that? I don't know. But we are zooming in here on the weekly. I have a few things going on here, by the way. We want this ratio to go. If you're a gold and silver bull, especially silver, you want this ratio to go down, right? That's all that there is to it, because when it is going down, silver is outperforming heavily, and the other way around, especially when it spikes, you're having gold doing the, gold is dropping, but to a much lesser extent than silver. Uh, these spikes here is always when gold is dropping, but silver is dropping more. So, but on the other way around here, on the way down, you're seeing gold rise, silver way more. So that's why this ratio is so important. And to me, this is actually some sort of a liquidity indicator, basically for the entire markets, because here, that spike there, '08, the entire markets, were in shambles. Here again, the entire markets were having a very rough day. So if we are to see what potentially could happen here, and I want to show you, we have this very beautiful triangle here. The blue one, the upper, very precise, very dead on, nothing major here. Um, and then you have the lower side where you're basically coming something like this, right, all the way up to here. Uh, you could argue that actually you want to take the internal like this, because you're then connecting more on the way there. So something like this, right, where you're connecting this here all the way up to here. And we actually had two events where I was also calling, this is the next leg down for the ratio, gold and silver miners will do well, and they did. They started to run heavily here back in early 2024. And then we actually had one more go here, where both of the times it didn't really let go. So what I'm seeing here potentially, if we are to fail and basically get to the upside, getting above 90 to 1 in the gold to silver ratio should mean that we are at that point in time breaking a 4-year trend line, basically a 4-year triangle, like here, that's your triangle. And that should mean, again, that we are going to potentially have a big surge like we saw here. So whenever you see, in my opinion, whenever we see, if we see gold to silver ratio above 90 to 1, that is when we should be very, very careful or nervous, whatever you want to call it, about a market, a very nervous market, you can say. Because looking back, these spikes are not good for any market, not only gold and silver, but also the NASDAQ, the SPX, everything is getting hit there, commodities. The Dixie is usually very strong at that point in time, and we have seen actually the Dixie being really strong and also breaking some 2, 3, 4-year trend lines. So there, getting above 90 to 1, be careful. I think that is a very, very dangerous spot to be. Again, could this be fake outs and all that good stuff? For sure. But if we are to establish here and then start to gain some traction, just be careful. So what I'm looking at here is basically this little, if we are to remove some of the longer term stuff, I have this little, you can call it this little blue triangle here, where we have, this is basically the framework, I think, for the direction. So hopefully 1, 2, 3, 4, 5, and then we go down, right? That is what we want to see, especially as a silver, holder, but also for the entire markets and especially the mining industry. However, if we are to fail, right? If we are to say, nope, the timing is wrong. I do believe that we're going lower, but the timing could be wrong, right? If we don't break that blue and we start to move here, danger, that is for sure. So yeah, again, could we be, again, I think I'm very confident in the call that the gold to silver ratio will reach a very low number, but the timing of it, again, could be wrong. It could be that we need, a few more years before really turning down. And again, not only gold and silver will do really bad if we are to see a move like this, because there's also, some trend lines going on here. And actually, you could call this a major, like a big bear flag. But again, if we are to get there, you can see we could actually be moving all the way to roughly 116. Again, still overall being bearish, right? Where this is, and this is where it hurts big time for the markets. And then we're going to see that collapse like we saw over here. So again, timing wise, could it be delayed like a year or two? Yeah. But that won't be until we have severe damage to crypto, to the tech, to mining. Basically, everything here will do really bad. Rates will plummet. The Dixie will probably go up, like it normally does, because that is still the safe haven in fiat. Maybe the Swiss franc is, I think the Swiss franc is a better one, but definitely, top of the pop when it comes to fiat. You all know my attitude toward fiats. They're all, going down, but the Dixie or the dollar is definitely the better one if you want to talk about performance. So yeah, a break, in my opinion, above 90 to 1 could actually open the possibility of a move from 90 to roughly 115 and 116 up here. And that will be probably fast because you're breaking such a 2-year triangle here, excuse me, a 2.5-year trend line. There will be some resistance along the way, the obvious triangle high at just a tad below 100. And then you have the big 100 number, which is always, going from 2 digits to 3 is always resistance. But again, it opens up the possibility of a lot of damage to the markets. And yeah, we will see if that is the case. But I just wanted to to mention that we're actually not far away from that move where things are looking really bad. We're only talking 5% outperformance by gold, going from roughly 86 to like 90 here. Then again, that is where bad things potentially happens. I have made my chart, looking at the long-term picture, where I do think that we are going way lower, but again, timing-wise, difficult. Because I thought we were going to break here, clearly not. Then we had a second one, so hopefully the third one will be the one where we collapse there. But this, to me, if you want to have like a triangle on, that's the one. Ideally, you don't want the lower one to be this steep here. You want them to be somewhat, what's it called, even. But yeah, let's see how it performs. So that is really my views here. Again, just wanted to share that. Again, I'm not always looking to be very bullish gold and silver. I'm also looking at the potential of that move, and that will be devastating for like 6 months or so. That will be extremely devastating if we are to see that completely move up to there. So yeah, have a great day, guys. That is just, again, my opinion. Let me know if what do you think? Will it happen? I do think the gold to silver ratio is a very good one, especially, and I've said this before, looking at the mining sector in general. When we see the big collapses, that is when the mining sector does really well, really well. So when and if we see this move here, right, the mining sector, we're talking iron, platinum, palladium, uranium, gold, silver, copper, it doesn't matter. They will do really, really well, just like we saw here, right? So we're basically waiting for the next move down, but will it be from here or will it be all the way up from there? So again, difficult to say. Have a great day, guys. Again, if you like the content, all that good stuff, hit the like and subscribe. Have a great day, and we will see you next time. Bye.